It defaulted on this term by refusing to redeem the bond in gold, and neither did it account for the devaluation of the dollar from $20.67 per troy ounce of gold, the 1918 standard value, to $35 per ounce. The 21 million bondholders therefore lost 139 million troy ounces of gold and approximately 41% of the bond's principal. Wednesday, May 28th, 2025, Maneco 64, home of alternative economics and contrarian views. Well, there's that saying that all wars are bankers' wars. And I think it still applies today, and we have to be very vigilant because, especially with the fact that the bond markets, especially in the US, the UK, and Japan, are under tremendous pressure. And without the bond markets functioning properly, without the cost of borrowing being relatively low, the people in charge, the bankers, the globalists, they could lose big time. So I think they could resort to war. And that's why we're hearing of the German Chancellor Friedrich Merz calling for like loosening, let's say, rules that the Ukraine can't fire like Western missiles into Russia. Yes, he hasn't gotten it through yet with his coalition, but I think it's very serious, and I'm sure the Russians are watching that. So that's what we're going to cover today. I'm going to reference a couple of books. I'm going to look back into history and how the bankers really don't have your interest at heart, nor your family's interest at heart. But before we go further, I'd just like to thank all of you for your interest in the channel. We've reached 140,000 subscribers. Yes, I think we reached 100,000, as you can see there, last year. So it's only been a matter of a year to get the new more 40,000. It took 9 years to get 100. So it looks like the channel's growing. And without you, there wouldn't be a channel. I wouldn't be able to dedicate as much time as I do to this channel. Yes, my videos are short, 15, 20 minutes, sometimes more, but it takes a lot of time. Not that it's really something that I don't enjoy, but I keep an eye on things almost 24/7. Yes, thanks again. And for those of you who watch the channel but haven't subscribed yet, make sure you do. It helps the algorithms. And I like to give a shout out to Dirty Men Safe as well. They've been a long-term affiliate. They provide underground safe solutions to securely store your valuables like precious metals, cash, jewelry, electronics, documents, or even crypto passwords. So check the description of this video. There's a link there, and if you use that, you get 10% off from Dirty Men Safe. I'm going to start with patriotism because that's the emotion the bankers and the press and the politicians and the celebrities that the bankers influence and control. And how do they do that? Well, they've got control of the currency, right? The fiat currency. They can control a lot. Not everything, of course. But so I want to go back to World War I because the US only joined in 1917. And there's a really good story about why they joined. But suffice it to say, we don't have time for that in this video because this is about something else. But they didn't join to save, to make the world safe for democracy or to end all wars. Yeah, there's a lot more intrigue involved. But anyway, the US entered the war in 1917. And yeah, the British, the Allies needed a lot of money because the Germans actually had almost basically won the war by 1916. So they needed the British and the French needed the help and the manpower, unfortunately, from the Americans. There were a lot of, I mean, deaths of the French and the British. That's the other thing they do. They push the patriotism, push he's the bad guy there, and the people who suffer are the public, because you send your sons to fight for the bankers, because that's basically what it is. And I'm not being disrespectful about it, but I spoke about this the other day. War is a racket, right? And that was a major general, the most decorated American soldier in history, Smedley Butler, who said that, not me. But anyway, it's interesting as well that the Federal Reserve Act was passed just before 1914. It seems kind of convenient. You have here the China of your day, i.e. the United States growing as a major economic and financial power without a central bank. And the Europeans are thinking, well, we need to tap into the wealth of America. So they create the Federal Reserve, January 23rd, 1913. And then, lo and behold, there's a war that kicks off in 1914. But unfortunately, the Americans didn't want to join. They were isolationists. But anyway, you can find this on Wikipedia, and they're the Liberty Bonds. So what were the Liberty Bonds? Well, Liberty Bond, or a Liberty Loan, was a war bond that was sold in the United States to support the Allied cause in World War I. Subscribing to the bonds became a symbolic patriotic duty, there you go, in the United States, and introduced the idea of financial securities to many citizens for the first time. So the bankers are always thinking of like how to kill two birds with one stone. Not only did they want your money, and then not only did they pay you like in devalued currency afterwards, they also wanted you to get hooked into their fiat currency Ponzi scheme, so they could leverage on top of you. So that's really interesting as well. So there are several Liberty bonds issued. As you can see here, Liberty bond issues 1917, 1918. But here are the details of the Liberty, the fourth one. Date of bond issue, October 24th, 1918. Coupon 4 1/4. Callable. Well, callable, it means that the government can basically go into the secondary market and pay it off. And the maturity date was October 15th, 1938. And they sold 7 billion of this, so it's huge for that day. It says here, the terms of the bond included the principal and interest hereof are payable in United States gold coin of the present standard value. This type of gold clause was common in both public and private contracts of the time and was intended to guarantee that bondholders would not be harmed by a devaluation of the currency. However, when the U.S. Treasury called the fourth bond on April 15, 1934, they could call it, it defaulted on this term by refusing to redeem the bond in gold, and neither did it account for the devaluation of the dollar from $20.67 per troy ounce of gold, the 1918 standard value, to $35 per ounce. The 21 million bondholders therefore lost 139 million troy ounces of gold and approximately 41% of the bond's principal. The legal basis for the refusal of the U.S. Treasury to redeem in gold was the gold clause Resolution 7310, dated June 5th, 1933, the Supreme Court later held the Gold Clause resolution to be unconstitutional under Section 4 of the 14th Amendment. It said, we conclude that the joint resolution of June 5th, 1933, insofar as it attempted to override the obligation created by the bond in suit, went beyond the congressional power. Chief Justice Charles Evan Hughes. However, due to President Franklin Delano Roosevelt's elimination of the open gold market and the signing of Executive Order 6012 on April 5th, 1933, the court ruled that the bondholders' loss was unquantifiable and that to repay them in dollars according to the 1918 standard of value would be an unjustified enrichment. The ruling, therefore, had little practical effect. So that's how they get away with things, with executive orders, even though the Chief Justice of the United States said it was unconstitutional. So what about patriotism? Well, they're already using celebrities back then to sell bonds. Yes. Here's a picture of Douglas Fairbanks, movie star, speaking to a large crowd in front of the Sub-Treasury building in New York City to aid the Third Liberty Loan of April 1918. So there you go. They get the celebrities to sell the bonds. And I think, we could be in for more of this patriotism, celebrity, and banking strategies. And I saw a post by my friend Eric Young, or King Kong 9888 from Hong Kong. It's recent. It says, John Maintz, a farmer from Laverne, Minnesota, who was tarred and feathered for his German background and allegedly not buying American war bonds, or the Liberty bonds, during the First World War. So photograph taken in 1918. So that's what they did to people. Nowadays, I guess they'll name and shame you on social media. I don't know what they'll do. But that's what I'm trying to warn you about. A lot of these Liberty loans, what happened as well is that after wars, of course, there's a huge inflationary wave, and I think it's coming. It's already here, even though we haven't had a major war started. And what happens after wars is that the currency becomes worth a lot less. You have massive inflation, and that hurts bonds. And loads of people, not just in 1933, but in the early 20s, lost a lot of money because the bankers, they know how to trade bonds. They sell it to you at 100 or 101, and then the war ends and it drops to 90, and you panic and you lose 10%, and they make out like bandits. They've got the gold, right? And it's ironic that they were criticizing or vilifying people of German origin, World War I, and feathering and tarring them for not buying Liberty bonds. But then in 1930, the bankers themselves, they start lending to the Germans. So there you go. It's a German government bond, international loan from 1930, 5.5% gold bond. Another one of these scams, gold bonds. And guess who was involved? Well, Messrs. J.P. Morgan and Co. Who else? We've got another bank here. Yes, the First National Bank of the City of New York, which is really City Futures, Citibank, sorry, or Citigroup nowadays. And the interesting thing about this bond is that it was issued in 1930. And what happened in 1930? Well, our good old Bank for International Settlements was created to help finance Germany again. Why were they going to finance the enemy that was supposedly the horrible Han that they were killing babies and doing all these bad things during World War One? Well, because they had to rebuild Germany for the Second War. And yes, these bonds were sold to American investors. I wonder if Mr. Mainz bought any of these. I don't think he did. But yeah, this was defaulted upon as well at the end of the Second World War. And the other thing about this bond, it was issued in 1930, but in 33, no more gold because this was a gold bond. So it's all a scam, people. And the people who benefit are these guys here, right? These are the guys who benefit. They get all the gold, they default, they get the legal system to approve it. It's all done above board. And I've been talking about the bond market of late, or for the last 4 years, how I think the bond bull market we had from 1981 is over. Well, it was over. The top was really 2020, and how interest rates are going to keep rising. And that's a huge problem because we have a huge amount of not just government debt, but corporate, private debt, like regional government debt. And we also have financial sector derivatives instruments totaling over 1,000 trillion or a quadrillion. And these are highly leveraged. And we've got private equity debt. It's a mess. And there's such a thing as cycles. And the bond bull market we saw for almost 40 years, from 1981 to 2020, is over. So the bankers are in deep trouble. And they've got two alternatives, in my opinion. They can print like crazy, but that would destroy, and they might still do that. That will destroy their currencies vis-a-vis gold. And that's why I always talk about how important it is to have gold, silver, physical gold, silver outside the bankers' system, of course, and also to have hard assets. And I think they might still do that, but they will probably be, and they're already pushing for, I think, a war. And they're going to go for the emotion of patriotism. And unfortunately, I think a lot of people are going to fall for it again. A lot of people are going to keep buying government bonds. They're going to be ripped off. They're going to send their children to fight. And it's going to keep continuing. So that's the way I see it. Hopefully, I'm wrong about this, but my objective here is to try to warn you about this. And yes, with that, let's quickly look at where the markets are this morning. It's 8:35 a.m. London time. We've got spot gold at 3,310. It's up about $9. The high's been 16. The low has been 32.91. Silver is virtually unchanged. It's at 33.27. It's up about a cent, so not much. High's been 33.36. The low has been 33.12. The Dow futures is down 78. The NASDAQ 100 future is down 21. And the S&P 500 future is down 9. So the markets are fairly quiet. Dollar is down across the board slightly, not that much. WTI crude is up 0.5%, 61.05. Brent crude is up 0.5% as well, 63.82. What about the government bond market? Well, we need to keep an eye on the Japanese government bond market. That's a huge bubble that's looking to burst very soon, probably. Well, the 10-year yield is up 6 basis points at 152, and the 40-year is up 6 at almost 340. And that's significant because up until a few years ago, that was near zero, that yield. And even at the beginning of the year was at 2.6. So it's all about the debt. Yeah, the UK government bond market isn't doing that much better. And I'm going to talk a little bit about the UK tomorrow. So wait for that post to come. And with that, I'm going to wish you all a very good day. Take care. Bye.